Okay, so today we're going to be talking with two of our clients. Because today, the meeting for today is really like a day in the life of an investor, where we get to talk about clients and we can talk about them from the perspective of the real estate strategies they're pursuing, some of the things that we've handled for them, the ones that they're comfortable sharing, and then any questions that you guys have for them. Oh, Edith said, I remember when you were pregnant with him. Absolutely. Yep, you've been with me that long. Yep. Now he's graduated. Thank you, everybody. So I am gonna bring up two people, Sharon Friedman and Samantha Haberlack. So if you guys can please share your video so that I can highlight you, and then have you guys kind of tell us a little bit about what you're doing now in real estate, when you got started, some of the challenges, your real estate strategy, and then we can talk specifically about like the tax aspects and take it from there. Thank you, Melinda. Thank you, Joanna. All right, okay, that's Sam.
You can go first, definitely. I'm about 3 minutes from my house. And then, so I should be able to be, pay more attention.
Okay. All right, Sharon, hi, how are you?
Hi, good. How are you? Looks like you had a great weekend.
Thank you. Thank you for joining us. I really appreciate it. So just tell everybody a little bit about, who you are, where you live, your real estate strategy, what you've done so far, and any challenges, and then we'll have people ask questions, and then we'll move more into like the tax piece, if there's any tax or entity structuring or financial planning that we've had to do, and then we'll just take questions until we are ready. Then we will move on to Samantha.
Sure. Yeah. So I'm Sharon. Hello, everyone. And I'm based in New York State. I was in New York City for 30 years. And then in the beginning of the pandemic, moved up to the Catskill, Mid-Hudson Valley region. And because I wanted to live here for a long time. And so now I am living the dream. It's great. So I started about 10 years ago when I was in New York City. And it's kind of funny. I was always obsessed with real estate. And my family had invested in buildings from time to time. So I heard that chatter in the background. And so when it came time for me to purchase my own place, I realized in the city, I just wanted a yard for my dog. That's it. And I couldn't afford the price of a condo that had a yard. So I realized the only way I could do that was to buy a multifamily where I had the garden unit and my tenants would help pay the mortgage. So that's actually how I got started. And being the cost of living and price of real estate is very high in New York City, I had to look in emerging neighborhoods or neighborhoods that were rapidly, no one had looked at before, but now there was starting to be a buzz about it. So I started by taking a risk and investing in a particular neighborhood in Brooklyn that was up and coming, and bought a multifamily, and then ended up moving out and just holding it, and found really great tenants. And I held it, and it appreciated in value tremendously, and also cash flowed. It was great. But then when I moved up here, wanted to transfer my properties to places within a closer proximity to where I lived in Ulster County. So ended up selling that house, doing a 1031 exchange. And now I've bought a couple of replacement properties. I have one more to go. And also I've been doing some fix and flips up here. So, in terms of strategy, I would like to say that I have a concerted strategy, but it's been more like, access some equity from my house in Brooklyn, and then use that to do some flips up here. It was more like reacting to, well, there's some money to be made in this particular market at this particular time, and I'm going to do it. Now that I'm full time, my strategy is more. I like the idea of buy, renovate, refinance, rent. So buy and holds, and I like there's a housing crisis up here, and so ethically, I like this idea of rehabbing properties that were vacant before foreclosures and making them homes for people and providing housing in a place where housing is needed. So that's kind of where I'm ending up now.
Yeah, Melinda says is the BRR strategy. Yeah, buy, rehab, rent, refinance, repeat. And your strategy is primarily buy and hold. I mean, you did the house hacking with, I thought that's very, very creative, rather than, not having anywhere at all, get a multi-unit and then rent out the rest of the unit, stay in one unit, get what you want. And then when it's time to move on, cash out and then move on to the next strategy. If you guys have questions for Sharon, please feel free to post it. What has been the most challenging thing being an investor for the last 10 years? What is it? What's been the most rewarding and what's been the most challenging?
Well, let's start with the good stuff first. The most rewarding has been, I love the design aspect of it. And I also love this, as I mentioned, this idea of providing good housing for people. So I've really enjoyed the house. I'm doing a house hack right now in the house that I'm sitting in. And I've thoroughly enjoyed seeing this property go from a dilapidated, foreclosed property that needed everything from roof to septic to you name it. And now it's a really beautiful house. And, there are a lot of families that gave me offers on the house. And so it's going to be occupied and filled with love and life. And that makes me happy. So that part has been a lot of fun. And also, I guess also what's been fun is going through and assembling, like as I go through, I try out new people for different things and just feeling like I've found some really good people, and yourself included. But I miraculously found a really good contractor and a great real estate agent. And it's really fun to work with a team of people who are smart and teach me things every day, and and I can rely on them. So that's all been a really good part of it. And fortunately, I've made money off of this as well, so that's great. The challenges, though, it's not without challenges right now. Is converting from having a W-2 salary position to doing this full time, and having enough runway with cash flow to make it work. So that's been really challenging for me. But I think I'm coming out the other side, and it's all working out. It just required a lot of persistence, a lot of meditation to allay any anxieties around that. And so that's definitely been a challenge. And also, just having to go through making a lot of mistakes with trusting the wrong contractor, that sort of thing, until I got to the right team.
Good, thank you. So we have one question. Okay, Laurie, you go first, and then I'll ask Melinda's after.
Okay, thanks. Well, Sharon, congratulations for making the leap from your W-2 job to full-time investing. Was that hard? That's something I'm struggling with myself, and I'm lacking courage. Like, what was it that gave you that courage to leave the steady paycheck and go into full-time investing?
Some of it was just necessity. It was, there's instability in my job. in my W-2 job. And it was like, I was at one point I was faced with, well, I could get another one. And because I worked in the startup world, so there's a lot of volatility there. And I was like, well, do I want to continue doing this, or do I want to be in control of of my fate? And so it was kind of at this crossroads where I just got to do it. And a lot of what drives me now is just, I'm innately, I have to do all this research. I have to do all this work because it's my livelihood. So it's highly motivating. And I just am naturally a bit of a risk taker. I had a really challenging job. I was a principal in the Bronx for a while, and which was an extremely challenging job. And one of my friends, who was also a principal in the Bronx, told me, she said, wait to worry. Like when I started being anxious, and just see if, your mind can invent 1,000 different ways of how everything's going to go wrong. And in reality, maybe one or none of those things will happen. And you've spent all of that time and mental energy invested in these negative stories. So it's better to just recognize that, let it go, say it's okay, and just say, what can I do to make myself better or successful in this moment? So if I face a challenge, just figure out, what's my plan B, C, and D? What are the other ways around it? And I think that sort of mindset has been very helpful to me, and is, kept me going. Yeah. I mean, I also think it's really good to do, like, if you get your finances and your accounting and your team, like a basic team set up, and it'll make it easier in terms of thinking of like giving yourself some leeway. And, I started small. I started with one property. And so it was.
Do you do all your lead generation yourself, or did you build out a complete team for different aspects of your business?
It was just kind of, I picked up people along the way as needed. So it started with the real estate agent. And then I was rehabbing properties up here. And so just reaching out, I actually used the Nextdoor app, which is really effective up here, to start finding people, and just told everyone I knew what I was doing. And so just through that networking, I was able to find good people. That's how I found Ebere, through my real estate agent. So it's just like, talk to everyone, network as much as possible, and, contact people. And I tried them out, and a lot of them didn't work out. And then but there were a bunch that did. And I'm trying to keep them, keep a partnership with them alive.
Cool. Thanks. Congrats.
Thank you.
All right, Melinda said, how do you vet good tenants long-term, no hassle paying tenants?
Yeah, I had really good luck actually in Brooklyn. Like, one thing that I did when I renovate properties, I know I could do the lowest end rental, like renovations, but I know my target is sort of in the middle, more middle income folks. So I try and make my properties somewhat nice. Like, I'll still use like Home Depot level level materials, but they'll look nice. They'll look, or splurge on granite countertops, because I think when I create a more attractive environment, then there's more, I get more tenants applying. So that's one thing that I did. And to vet the tenants, they had to make 40 times the monthly income. I did credit checks, and references, and looked at financial documents. So I was pretty thorough in vetting them. And I actually was a real estate agent in New York City for a hot second doing rentals. So I kind of followed the same procedures that a rental agency would when I did it on my own.
So the experience of being an agent helped, because I've heard a lot, where people just jump into things, but sometimes you've seen that those that are successful are able to sometimes port experience from one industry to another, industry. Thank you. Eric has a question. How many tenants have you had to evict with the New York laws that are more favorable to non-paying tenants than to landlords? And how was that experience?
Well, I've been super lucky and I haven't had to evict anyone. I've had good tenants the whole time. I mean, but granted, my portfolio is small. I'm sure someday it will come up. And especially being up here, it's a different, I think it's, the population isn't as financially, the demographic is different than there was in the city. I think in the city, everyone wanted to live in the neighborhood where my house was, and it was a nice house, so I had the pick of the litter. Whereas up here, I think it's a little bit different. So I'm sure it's something that I'll face at some point. But I need to. But I'm trying to set aside, or I do have set aside the rainy day funds, like 6 months of reserves. So hopefully I'll be able to weather that, or hopefully I won't have to do it. I think I'm just trying to be pretty rigorous upfront with vetting tenants.
Thank you. So, thank you. We're going to move to the tax piece, but I did want to share my experience in terms of making the leap. My making the leap is not necessarily moving into full-time real estate, but just being a full-time business owner. So the principle is the same, right? Like you have this regular job. For me, I was a CPA working for one of the largest real estate investors in the DC area, largest as in 100 multi-member LLCs, 50 single members, about 350 properties. And then we had to do taxes for him, his kids, the foundation, all the business. So literally doing his taxes took us a year to get done. And then by the time you get some breathing space, it's time to start over again. But that's how I picked up a lot of the experience that I have now. It's kind of like seeing how they did things. But for me, what really motivated me to take the leap was just that lack of control. I had gotten married, 3 kids, working, and it became very stressful because just driving from Beltsville to Bethesda, that was like a 1-hour drive. Like you got to drop off the kids at school first, then you got to drive all the way to Bethesda. So it became a lot. And then like when you want something, you're kind of like looked at funny and all that. It just, you're just stressed and you're just wondering, yeah, you might be making 6 figures, but is it worth the stress? And then the kids, having that much time for the kids. So that's one. But the bigger thing was that prior to even going to work for this firm, I was working with Intuit TurboTax. And we generated a lot of income for them. They invited us, flew us over to La Jolla, met with them. They really wanted to know what we were doing in the tax industry. So we're like excited about it, only to find out that they brought us close just because they wanted to know what we're doing. And the following year, they changed the contract. So they now brought a lot of things that we were doing in-house. So the whole thing was not having control. And so the president of the real estate club, my real estate club here is the DC REIA with Sherman Ragland. Sherman told me at that point, Ebere, you might be making a lot of money, but you don't have control. You could lose it at any time. Anything can happen and you don't have control. But at that time, I wasn't really listening because I loved the stable income. But you only end up finding out, hey, stable does not always mean that it's going to be there. It could be taken away from you at any point, which is exactly the experience that we had. And then fast forward with working with this largest real estate investor, I prayed about it. And, after a while, I said, you know what, I'm starting to talk to investors. There's a lot of people that know me as a CPA. They're wanting my services, but I just don't have the time to serve them. So when I spoke to Sherman is like, hey, if you want to build your business, there's a lot of real estate investors out there who need what you offer. You have a lot of knowledge in that area. But I was scared, I've never done it before. I've never dealt with a client like a solopreneur. I'm used to working for like a large real estate investor, just one person. How do you build a business? Is it going to be stable? Would people want my services? All those questions were there, but I had to move out in faith. And then I went and gave them I gave them a letter saying that I wanted to cut my hours from like 33 hours a week to now 22. They fired me. So it was very difficult because, now all of a sudden I don't have a job. But guess what happened? So they fired me before Thanksgiving, and Sherman gave me a speaking opportunity in December. In December, I made more money that month than I was making monthly working, for this person. And that's when I knew there was an opportunity. So since then we've grown, all of you have come over the years, and the business, we keep growing almost 20% every year. I would never look back at what I'm doing now. I love serving you all. I love how it's very relatable. I'm also a real estate investor. I'm learning a lot, being able to implement these strategies for people at that level is more rewarding, but I didn't know it at that time. So I think sometimes you just have to take the leap. You can plan. It doesn't mean, go and put in and quit and say, I'm going to quit my job tomorrow, but just have a plan. I was able to, even though I had left, I had started building. I was with Sherman since 2005. So 2005, 2006, 7, 8, for 4 years, I was heavily involved in that real estate club. So that when I left and started doing speaking engagements, people already knew me. I'd built up that network and that relationship, that once I started offering the wealth building program, which most of my clients are the ones that came up with the program. I didn't even do it. There was enough people to say, hey, we like what you're doing and we're going to, patronize your business. And it's been growing since then. So sometimes it can be scary, but I would never look back. I like being able to write my paycheck. A lot of opportunities have come out since then that I would never have thought of. I'm able to partner with clients because guess what? I have the advantage of seeing who's doing really well. And I'm able to cherry pick like, hey, if you have a deal, I want to partner with you. Or people will come up to me and say, hey, we have a deal. Do you want to partner, or do you know other people that want to partner? I kid you not, there was a day I didn't want to be bothered with a deal. I'm like, I'll just send it out and see what happens. It's Christmas. I don't want to be bothered. And within 24 hours, we had people make a $400,000 commitment. And that's how we were able to buy, some of you have heard us talk about it. That's how we're able to buy the self-storage facility in Pasadena, Maryland. So these are things that I would never have been able to do had I kept working for somebody else. So, I will encourage anybody that's thinking of making the leap, please schedule your appointment. Let's do a one-on-one and talk about that, because it's very, very possible. And also you have to be willing to take a pay cut. I took a pay cut to build a business, but I've more than recovered it. So from then, 2009, 2010, so 13 years later, I've more than recovered what I lost those first couple of years trying to build a business. And now I have an asset. If I decide to walk away, I can sell the business and have value in it, compared to the other place where you walk away. That's it. You don't have anything. So please feel free to schedule an appointment. Let's have that discussion, look at the numbers, look at what's possible. And there's some people where it's okay for you to keep working till at a certain time you leave or you retire. So it's not a one size fits all. So the last question that I want to ask Sharon is, you talked about doing the 1031 exchange. I think that's the most, I don't know how to explain that, but that was the most fulfilling thing I did that week. I'll just say that week, because Sharon came to me on a Tuesday. Here she has a property under contract, and she was gonna be closing on Friday. And here she's talking to me Tuesday evening and saying, oh, I want to do a 1031. I was like,
Well, you're responsible for that.
yeah. So I said, hold on a minute. And then we called our qualified intermediary guy, Blackacre, Bobby Levinson. I'm like, hey, Bobby, Sharon is closing by Friday. What are we gonna do? And that was a ton of money. She had built significant equity in the property. I think your taxes was gonna be almost what, 200? Some
Like
crazy amount.
180.
Yeah, something like that, a huge amount. And we're trying to see how we can mitigate that. So with Bobby talking to her and, they got doing everything, share that whole experience. And how did you feel knowing that you were able to do this 1031?
Well, Ebere, this is the story that I tell everyone when I talk about I have a great CPA and why she's so great. Yeah, it was like I think it was our first meeting with the two of us. And I was like, oh, I was selling this property and I thought I'd hit a roadblock with getting a 1031 because I didn't know about like debt service loans. I didn't know about that whole world. I was like, I was so over leveraged, or not over leveraged, but I was very leveraged on that house and didn't think, so I wasn't pulling out enough cash to spend the total sale price. And so I thought it was dead in the water until you were like, well, let me reach out to Bobby. And then by the end of that day, Bobby had conferenced, or Barry had conferenced in me and Bobby, the 1031 exchange officer. And he was like, no, here's how you do it. And we can do it. And we'll have to do a rush on it. And I think the two of you also put me in touch with a lender who knew about all these commercial loans. And then I was off to the races because then I didn't end up going with that particular lender, but it opened up my mind to exploring all these commercial loans, like all these loan products that are available for investors. And so now, and I'm buying 3 properties in replacements as a result, and miraculously I've pulled off this 1031. Well, the third one's closing in a few weeks. So, hopefully we'll have pulled it off. But yeah, it was just a matter of that's why I was talking before about it's a matter of having a really good team and learning as much as you can, talking to everybody. Because I thought I'd hit a dead end and I didn't. So I'm very appreciative that happened.
And also we were able to quickly help you set up also a solo 401k to be able to access cash. So there's a lot of things that are available when you're a business owner that is not available when you have a regular job. And knowing having the right connections and knowing people in the industry that could help you is amazing how much I've learned just talking to other people that I didn't even know was possible. Thank you. Bridget said, you're absolutely right. I walked away from my nursing job going on 5 years now. We need to bring Bridget back. I know she feels like, Ebere, you make me speak every year, but literally she went from nursing to full-time real estate investor, and all her properties are out of state. She's also a New Yorker. Yay, New Yorkers. I was born in Brooklyn, so I'm with my New York people. Born in Brooklyn, but she's in New York, but all her properties are all the way on the other side in North Carolina. And she said it was scary at first, but she's happier now and sleeping in her bed at night. So Eric says, I'm selling my property. I'm thinking of doing a 1031 exchange. Yes, absolutely. Please reach out. I'm also going to write that down so that we can reach out to you and schedule. And if anybody here wants more information or you want somebody to reach out to you, please feel free to, send them a private message, but do the honor system. We don't like craziness. That's why the only people on here are those in the wealth building program. So if you will take somebody's information, please be very respectful and don't waste their time. But one thing I know is that there's a lot of people who are very, very willing to help and share their story. So right now we're going to bring on Sam. How are you, Sam? Thank you.
I'm great. You know, I'm sitting here just shaking my head yes to everything from, you know, finding that team when you have out-of-state investors to taking the leap and you know, owning something. And I will say everything you said, Ebere, about owning your own business, you can say the same thing about owning real estate. Right? Because if you rent and you rent, yeah, it may be cheaper to rent, you know, maybe a little less expensive, maybe more, you know, financially wise in the short term, like this month, but you can't look at it at this month. You can't look at it as, you got to look at where are you putting your money and what are you going to get out of it once you leave that rental or that home? Am I going to be able to get any money back because I own? Or am I just going to walk away and they just took 180,000 of my money in rent for the last however many years and they're walking away with it? So, I mean, I have, we outright own 3 homes now. I didn't pay them off. The renters, the 3 of them, they paid them off. So I guess I'll start. Sam Haberlack. I am proof positive that an ADHD person can be successful in business. I don't know if you can tell. Most people can, because I don't hold back. I am who I am. When I was 23 years old, I decided I was enlisted in the Air Force, and I decided I want to do ROTC. And first thing I did was buy a property, because how does a 23-year-old single woman live through college and put herself through college? I got the scholarship, but I needed a place to live. I needed income to help pay for that place to live. So I bought a house, a 3-bedroom house, and it was what I needed. Just like, you know, just like we're talking about, and everything you were saying, Sharon, is the same thing. If you want something for yourself, see if there's a way to house hack. I house hacked 24 years ago. Like, wait, no, 26 years ago. Oh my God, I'm getting old. So I was 23, got a 4-bedroom house, 3 roommates in College Town, and they paid for my roommates paid for my food and my board. It was completely covered. So cash flow to help pay for food, pretty much automatic. Since then, I've spent 26 years in the Air Force. So every once in a while I'd move, we'd buy a house to live in, I'd sell that house and buy another property with the proceeds from that house. So as you collect your wealth, even if you're not in a place for military that's out there, even if you're not in a place where you can buy yourself, Germany or Korea, that's okay. Buy something in your hometown. That's how we now own 3 homes in Oregon, because I'm originally from Oregon. Fast forward, I was a corporate executive. Same conversation. I wasn't exactly happy. I was getting a W-2. I was making good money, but you know, it's like a prayer moment. Do I continue with this W-2 and continue to help somebody else get $100 million contracts for their business? And I'm over here on the side going, yay, one for the team. I'm really excited for the team. Or do I break away and, you know, a lot of prayers, a lot of research. What do I want to do with my life? I'm pushing 50. Where do I want to be in a few more years, and prepare for that future? So as I'm praying for that, as I'm trying to think through what I want my life to be in the future, I thought back to, you know, somebody said, if it's your hobby, you know, if you can make money in your hobby, and I'm like, what's been my hobby? Owning houses. And so when we finally owned all, we were able to pay off 3 of those houses. Well, the renters, paid off 3 of our houses. That was the moment, because I had my Air Force, I had a few other forms of income, passive incomes coming in. So that was the moment that it's like, you know, I don't need to I will never be a pushy real estate agent, ever, 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 ever. So that was the moment when I'm like, I can give advice to my friends, and I can do it as a real estate agent, and I can be a true agent that is fiduciarily responsible to my client, not to myself, and help them. And to me, that includes being able to have a conversation with a homeowner to say, should you rent or should you sell? And like I have a client she's buying a bigger house. I'm like, rent or old. Here's the reasons. Here's the return on investment for keeping that home that you've had. Everything looks good. The numbers look good. Keep it. And then the person decides if they want to keep it or if they want to sell it. So taking the time to really think about, you talk about strategy. taking the time to look at the numbers, understanding the numbers. Ask Ebere if you don't know how to do those numbers on return on investment. You know, making sure that you're thinking through those decisions and not making snap decisions. And if you don't want to be a property manager, hire one. Because I saw one comment on there, how often do you increase the rent? When the market calls for it, that's when you should increase the rent. But how do you figure out when if the market's calling for it? Property manager, that's one of their big time jobs. Every year they should be looking at what the market calls for that home in that location, and increasing the rent if it's called for. Because the last thing you want to do is have a home for 15 years and then you find out that you're making $1,000 less a month than you should, because it didn't increase every single year like it should have, or every other year like it should have, and you weren't taking advantage of that. And those renters are never going to leave. You're going to have to they're going to leave kicking and screaming, because they're $1,000 under 20. They're paying $1,400 instead of $2,400 a month. They're never going to want to leave. So that's definitely have the advice of a real estate agent or a property manager. Have somebody in your team on your side to help you. You know, so that when you own these homes, we have 3 in Oregon, 1 in Virginia, and 4 property, or 4 homes, 4 doors. If it's a multiplex, 4 doors down in Florida. So 8 doors total. So do the numbers beforehand. Find a way to do those numbers before you buy. If you're going straight into a rental, like you're buying and you're only purchasing it for a rental. Do the numbers beforehand. But if you own now and you're thinking about upgrading and keeping your old, do the numbers before you sell it. Don't let some random agent out there tell you, oh, you should sell. That, not always. You shouldn't always sell. In fact, most of the time you should probably keep it. Just depends on your situation, and if you're or if you can make more money in another location. Maybe you should sell and go buy in South Carolina or Florida. Because that's where, you know, you might get a better return on investment for a particular situation, or invest. There's other ways to invest in real estate, as Ebere's covered in the past with syndicates. So there's a lot of options out there, and you know, having a team to include a real estate agent, you know, and Ebere and a 1031 advisor like Bobby, having that team behind you, having good painters, good, you know, people that can renovate homes. Having all of that with you it's the only way to be successful in this. People that you trust, who aren't just going to give you advice that's just for themselves.
So let me ask you, you said 26 years ago, what has been your best experience and what has been your worst experience?
Okay, worst experience, living out of state, not trusting a property manager, and getting stuck where I am not making enough rent off of a home, because I love my mom. My mom's awesome, but she did not increase the rent. She's super sweet. And a sweet property manager is wonderful. However, sometimes you need somebody who could be a little bit of a shark and really look at the market and be professional. And I was paying my mom too, you know, because it's why for me to give back to my family. But my biggest mistake, my biggest regret is looking back and not increasing the rent, you know, as it should be.
So let's talk about that for a second. Because I'm on the spectrum of the sweet tenant, but here's my logic. If somebody has been with me for a while, they've been paying rent faithfully every month, I feel like my way of rewarding them and having them stay longer is not to necessarily increase the rent based on what's going on the market, but increase it. Like if the condo fees increase, I'll increase, because I feel like if you're paying and you've been there a while and you're kind of helping me pay down my mortgage,
True.
I kind of want you to benefit from that. And especially if it's, you know, like 2 of our properties is, you know, single mothers with young children. So I don't know, I know several of us here are landlords. What do you think? Are you kind of like Team Sam or Team Ebere?
No, not at all. I think it's a service. Don't become a landlord if it's all about you. I'll say that right now. You're there to provide a service to your community. You must provide a service to your community. Improve the houses in a neighborhood. You know, don't be the landlord that just lets something go to crap. You've got to make it good for them. And I agree with you, Ebere, to a point. 300, you know, I'll say, let me say, 20 up to 20% under. You don't, you know what I mean? Under market value. If it's more than 20%, that's not an investment anymore. Because if you look at it and that house is worth $400,000, right? $400,000 I should be making to make 7% back. I should be making, if you know, include the loan in this if you want to, but you should be making about $400 for every $1,000, $100,000. So I should be pulling in $1,600 minimum. You know what I mean? And if you're not, then you need to look at that. You need to actually do the numbers. And if market value, because real estate rentals, you should be making more than 10% back. If you're not making more than 10% back, then that may not be a good place to go to buy that rental. So I will say to a point, because it's not a charity, it's a business, right? So be charitable and be a good partner to your tenants to a point. It's not a charity. So if you're not making 7 to 10% on that home, and again, it's not cash flow, it's about the value of the home and the money that's coming in to match that value. And that could be going toward your mortgage, right? To pay down your mortgage, put all of it back in the mortgage, pay that puppy down. Sure. Unless you have I could go on, unless you have a really good percentage. If you have a really good percentage, you know, your rates are really good. Like you've had the house a while and it's at a 2.75, maybe don't pay that one off faster. But pay that down so that it can be cash flow at some point. If you're not making enough money on it, then there are other ways to invest where you'll make more.
Okay.
You know what I mean? It's a give and take. So I'd say maybe 15 to 20% can be in that form of, you know, having that part. Another thing you can do, you can give them a month free at the end of the year. Keep market value and give them a month free at the end of the year for being a good tenant, or half a month free. Give them some benefit back. I've done that before too. But if it's matching market value perfectly, or if market value drops in the area, consider giving them something back. Don't lower the rent if you can all, because it's really hard to get it back up. If they're like, oh, you know, houses in the area are going for a lot less, say, okay, how about, you know, if this partnership, I want you to stay, you're wonderful, I'll give you a half a month free at the end of the year. Work with them.
All right, so we have 3 questions. Uri, if we can do Uri's question by chat, so those are a few, let's throw out, she's asking who specifically should be in your team, what professionals do you need? So if we can post that in the chat so that we can move on to the next 2 questions. Eric is asking, how rigorous is your financial analysis on properties? Do you run 100 formulas on 3 pages, or is it something else?
It's more like a single page, honestly. I mean, you can't, there's too much up in the air. So to me, it's not about, it is about, are you going to get cash flow? That's a question. But it's, you got to look at, do I want cash flow, or am I doing this for cash flow, or am I doing this for equity build and wealth building? You know what I mean? Am I looking long-term and I want to build this and I don't want the cash flow right now? Or are you at a point where your life where you want the cash flow? So those are 2 different numbers. That's 2 different, running through those numbers are 2 different things. Either way, you need to look at, you know, the total value of that property, the total amount that you expect to get for rent. You know, what are the expenses that you're going to be faced with? What upgrades do you need to do on it? Do you want a property manager or not? And just doing that kind of a cost benefit analysis is so important. But I don't really do more than a 1-pager. I mean, Ebere she's probably, I don't know, is that okay, Ebere? Am I okay to just do a 1-pager on mine?
Yeah, ours is 1 page, because the main thing is just really evaluating the ROI, the cash on cash, how much the risk, DTI ratio, you know, the analysis of, is it going to give me the kind of, you know, return on investment, the rehab cost. So yeah, for me, ours is a 1-page.
Yeah.
Yeah.
And do you know people in that, if you're out of state, be careful. If you're going to invest out of state, that's great. I am investing out of state, but be careful. You've got to have good contractors. You've got to have good support. Yeah, Sharon, exactly. I just saw Sharon popped up. Got to have good contractors. I mean, I have good contractors in 3 different states. That didn't happen quickly. I made a lot of mistakes and trusted the wrong people on a few different, jobs. It can be challenging. It's more challenging when they're out of state though, because you can't just interview people. But Nextdoor, Angie's List, there's a few different systems out there that you can use to try and find someone, interview more than one company, talk to them about long-term. I want a long-term partner. I want somebody who can partner with me to improve this house and multiple houses over the course of such and such, talk to them about that partnership. Don't just let them know that it's not just a one and done sort of deal. I met with a painter today at a property for one of my clients. And I'm like, we need the best price for this because they want to keep this as a rental. She's moving. So rent or sell, like rent. It's in DC, rent. So, and it's in a great location. So I talked to the painter today. I met him in person for my client. And I said, give me a good price. It's this and this. I want you to do, baseboards. We talked about everything he wants to do. And I was like, I need you to give me a good price because we can bring you a lot of work. So
Ethan says here, how do you evaluate rent increases with government tenants?
Do you mean like somebody who has
Like Section 8?
Section 8. Okay. If they have a voucher in Section 8, usually they're really, at least where I am, they're really good.
The vouchers are high.
The vouchers are high. Honestly, the only issue I have with placing people, because I help people find rentals too. And so I actually have a few, in fact, I got to respond back to somebody with Section 8 as soon as we get off the phone or I get off of this call with you all. The biggest challenge when it comes to Section 8, it's not getting the increases and having them be able to afford the increases. It's for them to find places that are going to be accepting, because good places, you all are going to own the places like I do. If it's a good place, and Sharon and I have renovated it well, Sharon, I'm with you, renovate it for mid to upper, because you're going to attract more people to come in. And if you've done that, then you're going to get 5 or 6 people applying for a home. And then are you going to pick the person with the Section 8? Or are you going to pick the person with 5 times their rental income? I want to help them. And I have had Section 8 people in my homes before. But it's not, they're going to increase. They're going to get increases to match the market. So honestly, look it up. If you have one in an area, look up what they're in your specific zip code, because Section 8 goes by zip codes. Look up in that particular zip code with their situation, their family situation, what they should be making there, what they're allowed to get, and what they're allowed to ask for and claim. And then if they're good and they've been treating the property well, and then see if you can match it and keep it to match them. Be careful when you do upgrades too. That's another thing I'll say. If you already have a tenant in a home, be careful what upgrades you do if you're going to do a big upgrade, and talk to them about it ahead of time. Because if you upgrade it beyond their price point, whoever's in it, and they're not willing to increase their rent, you're stuck.
Yeah.
You can only increase it so much. Every state's going to have a different rule on how much you can increase. And I know the DC laws, the Maryland laws, the Virginia laws, the Florida laws, and the Oregon laws. And they're a lot similar in how they all have a limit on how much you can increase rent per year. So don't think, hey, I can put $40,000 and I got an extra 40 grand. I want to invest it in a brand new kitchen. Do that between the renters. If you do that when you have one renter in it, then it can be difficult to recoup that money.
Good. Awesome. We're coming down the pike here. Probably just another 5 minutes. Does anybody have any questions? I'm going to bring back Sharon now. Anybody have any questions for either Sharon or Sam or me as we get ready to round out? Two things, you can post it in the chat and then I'll open it up. Two things, next week, we are going to be talking about property sale analysis. I've noticed that a lot of people are selling their properties or reaching out to us about the capital gains. So I want to show you guys the worksheet that we use, how to calculate your adjusted cost basis, your adjusted sales price, the capital gains, even how to look up what your potential fair market value is, and then how to calculate what the capital gains tax is based off of your tax rate and then the income where you are. One question that I had for you guys, you can post it in the chat or you can speak up. How many of you have ever dealt with Primerica or, you know, some of these financial and financial planning agencies? Do you prefer dealing with the Primerica or do you prefer dealing with an independent agent? Or do you, just tell me, just give me in a general sense, over the years, what kind of reputation do you think that Primerica has, or even other financial, like the Franklin Templeton, all those people? What do you guys think?
I haven't had experience with Primerica. I mean, but I can speak to it in terms of I'm now going through the process of buying multiple properties and talking to a lot of lenders. So I think, it's been interesting venturing into the world of commercial lending because, and like hard money lenders, and doing there's a lot of variation between the vendors in terms of sometimes the products that they offer, but also there's great variation in the rates, or the costs associated. So I think there's a lot of value in like spending a lot of time upfront talking to people. It's also a great way to learn about new products on the market.
All right, thank you. Anybody else, any experience with Primerica or any other financial planning firm, independent, or they're with somebody, or do you have your accounts with them? What has your experience been in the area of financial planning? Because what we've noticed is that a lot of real estate investors, most of us are very loyal. We only care about real estate and not necessarily looking at other vehicles. But part of the wealth building program is to make sure that you're also looking at other things, like Sharon said, getting the knowledge, kind of checking other things out to see what works and what is out there. So I just wanted to ask, those that are on the call, what experience that you've had dealing with different financial planning firms. Or if you had a question for Sharon or for me before we wrap up, we should be wrapping up pretty shortly here.
Ebere, I could share some experience I had with financial planners.
Okay.
We've had several. We've had everyone, from Merrill Lynch to many others, and they gave us this kind of uncertainty. They said with a really aggressive portfolio and the minimum of $1 million to invest, the best they could do on an annual basis is up to 7%. And I said, what's the downside? The downside is up to -30. And so that may be fine for people when they start, but we said, look, as entrepreneurs, we'll take the risk, and we've outperformed them year over year.
And the risk you mean is kind of making sure that your money is in real estate, that you have more of your investments in real estate than in the traditional financial planning recommendations.
Well, we've diversified. We had it in several different assets, and we actually had a competition. We said, we'll give you 2 years and you diversify and we'll diversify. We'll see who's better. And if you do after 2 years better than we do, we'll give you everything. And if you don't, we're pulling your account. So after 2 years, we pulled the account because they're underperforming.
Oh, okay. So kind of give them a challenge and then see. Okay, yeah, that's awesome. Anybody else? Let me answer Melinda's question. If you want to post, I want to hear what your experience has been with, any of the financial planning as a real estate investor. I want to get your perspective as an investor. So the formula that Sam was talking about is looking at your return on investment. So looking at how much money did you put into the property? So let's say a property, you put in $100,000 into the property cash, not finance, but $100,000 cash. And we're saying that you should be making at least 7 to 10%. So we're saying that your ROI should be at least $7,000 to $10,000 net profit after all your expenses. So now you have to look at how much rent you're charging. If you did a mortgage, less the mortgage, less the taxes, less the repairs, property management fees, whatever you have at the end of the day, is that 7 to 10% return on the cash that you put in. If you put in $30,000, anywhere from $2,100 to $3,000 a year. So the amount of money that you invested in this property, are you getting at least a 7 to 10% return cash on cash? If you're not, and your rent is not up to fair market value, that's what she was saying, go ahead and increase the rent. This is not a charity, this is a business. So she was answering my question where I was like, oh, but if the person has been a good tenant, she's like, yeah, good tenant, but if your ROI is not 7 to 10%, it doesn't make sense. So you kind of look at your ROI and that becomes the driving force. So if you're say like at 5%, but the fair market value allows you to increase the rent so that you're able to come out to the 7 to 10%, then you're better off increasing the rent so that you're able to get that ROI. All right, and then Sharon said, check out reports available on Bigger Pockets. Yes, I don't know how many people here are members of Bigger Pockets. I'm a member of Bigger Pockets. I post a lot of articles there. Bigger Pockets is really very good. That's like the social media site for real estate investors. So there's a ton of information that you'll see there, and it's just discussing real estate from different angles. All right, any final question before we call it a day? All right, thank you guys so much for coming on today. I will see you next week. If you have